Hello and welcome to another daily Forex market review. My name is Schimming, and this review is for Tuesday, February the 19th. Starting as always with my currency strength index, you can see that there was a respectable amount of pair separation or divergence in the marketplace between the major currencies. Now remember, keep in mind we are looking at one of the largest global liquidity pools to create this information. Another benefit of being a client of the firm is we allow you to trade directly into this massive global liquidity pool with direct ECN access. That's an excellent opportunity. So if we look at the screen currently, you can see that from rollover on Monday, it was a U.S. banking holiday. Typically the markets do not flow very well on a major U.S. or UK holiday. I did not trade yesterday, nor did we produce a review or anything. It was a holiday. You should have taken the day off as a trader. But coming into the day, when we got to rollover, you saw that the yen, here displayed in the blue, the light blue to the upside, and the Aussie were demonstrating some strength. To the downside, we really see just about everything else. You see the CAD in yellow, the Swiss in white, the euro was starting to move down, the pound was trying to move down, the New Zealand was moving down, even the dollar was trying to move down, but as we extend and come further in through the hours as it progressed, you can see the dollar really wasn't continuing down. It started to the negative side, but it really hasn't done anything substantial, and that's really been a theme with the dollar for the past several months. We have not seen the dollar trading the way the yen has. And so most of the trades, and obviously most of my focus, has been on the yen pairs, not only from their trading opportunities and identifiable trade entry and exit situations, but it's also the fact that the euro yen, pound yen, and Swiss yen are trading with the greatest average daily trading range on a 5, 10, 30, and 90-day basis. So as a trader, we definitely need to go where the action is, and the action is with the yen. Now today is no exception to that. You do see the yen is the most positive single trending currency in the marketplace, so that does become the focus. But what should be the opposing currency? What is moving down at the greatest rate or the most consistent rate that becomes attractive? CAD yen could be an opportunity, Swiss yen could be an opportunity, euro yen could be an opportunity, which we talk about over and over again, and pound yen. So I'm going to take off a couple of these. We're not going to be talking about the Aussie, so just to clean up this view, I'm going to take and click on my build screen and take a few of these currencies off of the view, just so we can strip away a little bit of this and you can get a clearer picture. So if we come over and I show you this, I'm just eliminating 3 of them to make this a little bit more obvious view, if you will. And I think it's really important to note, I'm going to advance it a little bit as well. I think it's very important to note what is really moving down here. What is showing the most downward momentum as a single currency, and what should be standing out for you right now. And this is going, I've advanced the chart just to the London Open. So from the London Open, we did see that the euro and the dollar and the Swiss were moving down the most. So trades during the London session, again, it's easy to say this after the fact, but while it was happening, the CCYX was displaying the fact that the Swiss was the most negative trending single currency. So if you look at your chart, you look at your Swiss yen, you'll see that it did produce some short trades during your London time frame. I focus these days, currently I'm focusing on the New York time frame. And you know from past lessons that the euro yen has been, in my opinion, one of the better pairs to trade. But as I say repeatedly, just because I am continually to talk about and use the euro yen as a reference, it does not mean it's the only pair I'm trading. I'm using it as a reference because we've been following it, it's been fairly obvious, and it does have the greatest average trading range. But then I also like the pound yen and the Swiss yen. I think they also produce some opportunities. I have not been seeing such favorable situations developing in the euro dollar or the pound dollar. And I know a lot of you like to trade those pairs, myself included, but since the start of 2013, they just have not been the best places to be. We have to be chameleons as traders. We have to be willing to adjust our behavior and our priorities to fit what the market is allowing us to do. We don't make the rules. We are just playing by the rules, and so we have to allow the market to dictate where we need to be. The CCYX goes a long ways in that because it allows me to see on any given day or any given market segment where the best opportunities may in fact lie. So as we get into the New York time frame, about midway through this chart, then you really start to develop a pattern here where the yen is still moving to the upside and trying to hold on to the gains it's shown. You don't see it really moving up rapidly, but it's maintaining the strength that it gained early on, with a somewhat upward bias remaining. But what should be standing out is this pink line that keeps trending lower and lower and lower and lower. The pound proved to be the most negative trending single currency in the marketplace today, and your pound yen short, which the majority of traders in our operation traded today, became the top trading pair on the day. So looking at the euro yen just as a reference, I'm going to jump over to the pound yen here in a moment. Looking at the euro yen as a reference, and this is a view I've been showing you every single day, you can see that the euro yen is still in that consolidative, or that what I'm calling the transitional phase. Transition over a consolidation. A transition is when there's a massive amount of buying and selling going on. We have much greater trading ranges and increased volatility. It's a very tradable event. However, we do still need to see it break to one side or the other, and currently it's right at 125. You know that I've been pointing out the significant support and the resistance levels below this range is 124 and the 123.50 level. We need to get below there, and we can start talking about breaking down and doing a breakdown trade and taking advantage if it goes lower. That is my preference. I've said that repeatedly. I see that the opportunities, if it starts to go lower, we can look at previous support and resistance levels and really be able to anticipate some good trading levels to either take trades from or get out of trades at levels that they reach. To the upside, it would be uncharted territory, and that would be if it's above 126, approaching 127, knowing that that highest point is in the 127.70 range. So that would be a breakout level that I'm pointing out up here. So this still presents an opportunity. But with the holiday and so far this week, the euro yen has failed to do anything significant, even though there was a short. I did place a short trade on it today for a very small gain. The euro just refused to drop and make that trade become anything hugely productive. So keep that in mind. This is still probably and arguably the best opportunity in the marketplace going forward overall, but not today. Now let's look at today, and this is looking at a 4-chart view now, and I want you to pay special attention to the two sides of the screen. On the left side, euro dollar and euro yen. You can see that the euro yen is trapped inside between the pivot and S1 and S2. S1 and S2 have both provided support, and the pivot has provided resistance, which it has not been able to trade above on this given day. This is less than, I think, less than 90 pips of trading range between high and low. That is less than half of the average daily trading range. Clearly, the euro yen is not in play today. The only reason for that is A, it is in transitional state. There are buyers and sellers colliding and keeping it from doing anything significant. I'm looking forward to the breakout or breakdown, knowing that no currency pair can move up forever, no currency pair can move down forever, and thankfully no currency pair can move sideways forever. The longer they consolidate, usually the better the opportunity coming from that consolidation, or in this case that transition. The euro yen is setting up to do something above average, and I'm looking forward to it. If you look at the right hand side of the two charts, on the upper level I meant to put up pound Swiss, and we'll pop that on here real quick. Or Swiss yen, because the Swiss moving to the downside, as I showed you on the CCYX, and the yen was moving to the upside. And then the lower left hand corner, you can see the best performing single currency pair on the day, which was the pound yen. Now look at this. Let's blow this up a little bit and really look at this thing. You can see that not only did it also, when we've talked about how the pivot levels have been very substantial for support and resistance for the yen pair, and the pound yen was no stranger to that today. You can see that it stayed below the pivot, it stayed below my zone configuration. That becomes very important. We want to look at short trades that are below the pivot and below my D lines, and we want to look at long trades that are trading above the pivot and above the D lines, obviously maintaining a trend. Meaning if we're short, we're looking at a series of lower highs and lower lows and looking for our entry when it sets a lower high, meaning it has to move up in the downtrend for it to be attractive, hence the reason we use the zone. We want it to move into the zone to take the trade. If it's on a long trade above the pivot point, we want to be setting a series of higher highs and higher lows. The ideal trade is after it establishes a higher low. That means it has to move down in the uptrend in order for it to be a proper long opportunity or potential long opportunity, and that would also be bringing it into the zone. My zone configuration is designed to produce a sweet spot, a range that tells me it's moved back into range enough to be worthy of my consideration, but not so much that I have to be afraid of the pair. So look at this pound yen as it moves into the New York time frame, which is really right in here. We come in and we've had the New York markets open, we've had the equity markets open, and it's firmly in the zone trading just below S1. This becomes an attractive situation. As it starts to trade down, this was the situation or the opportunity for a trade short that we looked at in the room today. I would have to say that the majority of traders took this trade, even though stubborn me had my blinders on, and I still with instead of taking the trade I should have taken, I took the trade that I wanted to see take and wanted to see develop, which was the euro yen short. The pound yen, as displayed by that CCYX, showed that it was a superior opportunity from the start. We acknowledged that as we're putting the short trades on the yen pairs, and what happened was the CCYX, as always, was correct, and you can see that the pound yen made a substantial move to the downside, and we can watch this thing progress, goes down to 144, and our anticipation, or where we wanted to see it go, was potentially once it broke past S1 or S2, then the anticipation was that it could see the figure, and you can see that it now is just dropping past the figure, and it has also taken out the S3 level because the pound continues to trend down. The yen is not necessarily trending up at the given time, but it's not losing any ground either. So as I've said before, a currency pair is usually going to be driven by one of the two currencies in the pair. But what you're seeking to do is place yourself in a situation where the other currency is not working against you. And in this case, the pound is driving the pair, but the yen, since it's maintaining or holding on to the strength it showed early, it's not working against the pair. So looking at this, we were able to utilize the figure and the pivot levels successfully, not only from a trade entry standpoint, but from a trade exit standpoint. Some of the traders looked at S2 when it came down here the first time and said, if it could reach there, I'll get out of the trade. We had some limit orders to cover at 55. The pivot was at 53. That was an excellent opportunity, and that's exactly what took place. So this is the way you should trade these pairs. This is how you should be looking at these pairs, and I can assure you one of the best ways to start each trading day and start each trading session is by utilizing my CCYX. This becomes arguably the best opportunity in the marketplace to start each segment as you approach your trades and trading day, so you can see ultimately what's really in play. Instead of trading your same pairs just because you favor them, again, you should have your short list, the currency pairs that you prefer to focus on, and then ultimately let the CCYX guide you on where you should be focusing your attention. You may like 4 or 5 or 6 pairs, but maybe 1 or 2 or 3 are the ones that have the greatest opportunity on that given day, and that's exactly what this is designed to do. It's a simple overview tool that will give you a leg up on the marketplace and other traders and help you become more efficient, more successful, and more profitable. And you know what? Access is easy. You guys can just send an email, DerekSchimming@gmail.com. It's on this YouTube page. Take me up on my offer. Come into our trade room, request a free access to the room, come in and see us do this analysis live and in color, and as we're making trades during the trading day, either for the London or New York session. Post your comments or questions on these videos, and I'll be happy to answer any of your questions posted in a future video. And you can also always send the email and get the opportunity to trade with us firsthand, and that's really what we're after. We want you to experience what we do, and we want you to learn from our proven, very simplistic, very straightforward methods. Trading is not easy. It is an art form, but it's an art form that can be acquired, and I can help you maybe modify some of your behavior so that you can be a more successful trader long term. I invite you for the opportunity. I look forward to the email and questions, and I look forward to having you watch future videos. I hope you find this informative. I know I enjoy doing them for you. My name is Derek Schimming, and as always, you guys have a great day trading.